Well, good day, all. I'm back with my kitty, Ivy, who wants to say hello to everybody. She's been at my feet here as I've been doing this, and it's fun. Today is Wednesday, the 31st of January, and we are at 2024, and the time right now about 6:10 p.m. Central Time. I have a house full of animals today. I've got my cats, and then my son came in from California with 2 dogs, so we're full. Thank God we have a good-sized home. So in looking at the markets, I warned everybody, including myself, and I want to start with that when we get to a certain point, we're probably going to lose that bullishness we've had since October 25th, 26th, 27th, where the stock indices right in that time zone bottomed out and just kept going straight on up. Almost all of, if you think about it, November, December, right through today. Now we're bouncing back a little bit tonight in the markets, but they got hurt, no question about it. We saw a lot of crazy action. Today was the day of the FOMC meeting. The Fed held everything steady as was expected, but it was the conference, and that's where everything came out. Number one, it doesn't appear that risks are to the upside. Number two, the Fed is staying data dependent. Number three, it certainly sounded to, when asked the question, that the Fed is not looking at March to be where they cut their first rates. They want to see more labor data. They feel that inflation is going the right way. It could pick up, but they think it's going the right way. They want to see an inflation, rent prices start impacting and coming down, which they're not seeing enough of from what the Fed said. And then we get to the labor portion. Now, on Friday, we're going to get another set of labor numbers, the U.S. jobs report. Today, we saw ADP. So instead of getting a number, if you'll recall, last month we had 164,000 jobs. Today, we come out with 107. I mean, that's 30% or so less. That's a big hit. Tomorrow, we're going to get Challenger gray numbers. Countering it is still, of course, the fact that we had the JOLTS data this week, which showed still 9 million job openings out there, so people can get jobs if they want them. It's at a lot of levels. So where are we? I think you have to listen to what the Fed chair said. I mean, he's so straightforward. He's straightforward in the sense that, no, the Fed's not going to do March. They might do later. That was one thing. We then got wildness when we saw in New York, I think it's called New York Commercial Bank Corp. And they had been one of those banks that bought some of the assets from, remember the 3 banks that failed a while back, and they bought some. Here's what happened to them. They bought assets, their bank goes up in value, they got to put a certain money away because now they're considered a bigger bank and you got to pay into the FDIC and so on, and your regulations change. And lo and behold, they have a lot of commercial loans. So some of the loans that they had bought, they had, in order to get assets, you had to buy some of this. They did earmark money away. But now they're under the FDI scrutiny. And all of a sudden, the FDIC and the other regulators are looking at it and they're going, wait a minute here. Your amount of loans that you have out there, they're getting delayed. In other words, people aren't paying on time. When that happens, what takes place is you've got to put up more capital. Your requirements start changing on you. It got them in trouble. And all of a sudden, the market realized everybody's forgotten about the commercial space loans that are coming up and how they're going to roll into it. Jeff Gundlach today of Double Line was out talking about it after the FOMC. And he said, you wait, this is yet to come haunt the market. And he's right. But this was the first one that we had. So as that came out, you set off a tirade of craziness. The gold goes shooting up in the market. The stock market didn't know which way to go over it. The dollar got a strong bid, and then late in the day, it let everything go. The Japanese yen takes off to the upside in a big way as people start panicking. Is this the beginning of the end because of the commercial loans that are hitting and another potential bank failure? What does that mean? And it's snowballing on itself. What I realized at the end of the day, and today for me and my clients that I had told trades, they lost money today. And I said, come out. It's a reasonable loss. No, nothing big. I'd make you Very strict statement on that. Well within the norm of a normal trade that I would be wrong on. And I said, when this market ends, nobody's going to ring a bell, but what's going to happen is you start going into whipsaws. I think today's one of the first days that we're seeing that in the stock market. Number two, there's a change of attitude. Yes, the Fed's going to eventually cut rates, but it isn't today. Everybody's been betting it's March. I mean, even after the Fed said it, I'm watching the Fed watch page, and it's amazing to me. Amazing to me. They're still betting while I'm watching it. There's over a 50% chance, even though we said no, the Fed's lying and they're going to keep going. Late in the day, that all changed, where they realized the odds of it are going to be no. But I'll tell you what's going to happen. On Friday, let's assume you get a bad jobs report. The naysayers will come out. The Fed doesn't have to wait. They're going to get another one of these jobs reports at the end of February, and they'll change their mind since they're data dependent, and they will cut in March. I don't believe that that's the case. I think that you are hearing straight, loud, and clear that they want to be late to the party, not early to the party, and they'd rather chase the market in a little way. If you didn't hear that out of the press conference today, you and I weren't listening to the same thing, and it's probably my fault. I'm older, my hearing's probably shot. As we're looking at energy, guess what the Houthis, I know you want me to say it right, I call it Houthis, but it's Houthis, all right? I don't like these people, so I'll call their name wrong. But the Houthis fired another set of missiles. They're going after more ships. The U.S. today is coming out and saying very clearly, again, all day long, if you're watching the press, we are not going to attack Iran directly in Iran. We are going to attack Iran surrogates and anything they have in a multitude of countries over a certain period of time. It could be a longer period of time, and we are coming. Of course, Iran said that if you do that, we will do so-and-so. Well, hold on. If you don't attack Iran in their country and they're saying they can't control these people, why are they defending them? So this thing's all ratcheting up is what I'm saying. It's not going away anytime soon. You will wake up one of these mornings and the Biden administration will be attacking. Another thing, today's so full of news, I just got to tell you. Natural gas. Remember I told you on Friday, I don't understand this Biden administration energy policy at all. When they went out and said, in natural gas, there's no more new permits. We're going to put into studies what we're doing for climate change. And when asked how long it would be, we can't answer that question. Of course they can't. There was a sit-in going to happen. Right now, this coming, I think, end of this week, beginning of next week at the Department of Energy, by saying that, they avoid the sit-in, they get the votes out of the climate people, and so now the House of Representatives going, hold on, you don't have the right to do that. So they're calling a vote not this week, next week. They'll probably have enough votes to say no, they're not going to allow that. It'll go nowhere because in the Senate, that is the Democratic controlled, and they'll probably be able to block it there. However, it counters what was going, and now the public starts to understand this is a crazy rule that we're putting in. Our allies are in desperate need. Last part. Again, they're trying to separate aid for Ukraine, Taiwan, and Israel from the border. Now, if they do that, I can't imagine that if Speaker Johnson brings it to the floor that the far-right Republicans don't call for his head. He's getting warned that if he does that, it could happen. I don't know. I don't know if there would be enough votes to take him out of office. We'll see. President, or let me say it the proper word, ex-President Trump. It is nothing wrong with calling him President Trump, by the way. That's out of respect. But ex-President Trump is now and has come very forcibly saying, if you can't get everything you want, you don't break those bills apart. You go for that border on everything. I happen to think it's foolish for the Republicans to allow separation. You get everything done at once. Last word, I promise you. Where's the budget? Aren't we supposed to be dealing with the budget? Please scour your news. Do you see one word on that taking place? Okay. So, on the E-mini S&P, damage was done today, but not a lot. You're down for the week, 0.76%. But on the chart action, you did a lot more. Suddenly the market's now coming down like this, and you have, again, a pattern of a higher high and a lower low. So this whole time frame of higher lows and higher highs changed today. You've broken that pattern. Does that mean you can't go up and make new highs? No, it doesn't, but the odds of it are very small. What it does is it changes things and it puts into light that the market's most likely to make a run to the 18-day average and possibly lower than that now. Where did the market stop? You know you've been running the upper Bollinger Band. That stopped the market, and momentum was lost. You lost the bullish embedded reading. Let me come back to this. Here is the market on the close of business. And you didn't get it back right away as we reopened. So, yes, I think today was the day that you had to take your loss in the trade if you were up there, or come out of the trade if you had big profits. And I think now you're sidelined for probably, if I'm a stock index trader, probably through Friday's jobs report in the morning, and then maybe take a look at coming back in. Don't get caught in missteps and craziness that can come of that. Take a look at the NASDAQ, how it came down now. It too has lost its bullish embedded reading. In the Dow, it too, no bullish embedded reading. Today was a game changer in the market. You now have markets that are overbought. Depends how far down they want to go, but I can make an argument for the 38,000 level there. And in the Russell, the weakest, we'll look at which is the only one under its 18-day average of closes. You do see what I'm saying? So I realize all these people that keep telling people on television, oh, you want to go into the Russell, these are the undervalued. Well, they're undervalued for a reason, okay? Eventually they'll come alive. But each time you've bought them, you've paid a price where you don't pay quite that price in the stronger stocks. That's the point that I'm making. In the 10-year note, excuse me there, you've now effectively gone from the lower Bollinger Band to the upper band. The market is building in, and it will continue to, that we have now gotten to the point where rate hikes are over, period. The next big move is going to be a decline. The battle will be, okay, there'll be the naysayers that say it's not going to be March. It'll be the June contract that sees this in the 10-year and the 5-year. I believe that that's the case. And that's where you're at in that. Momentum up. Not a trend play yet. You still have a lower low, higher high. Dollar index back down and challenging the support of the 200-day average along with the 18-day average of closes. And what about loss of momentum here? Well, notice that you got a 75 reading. So when we look at it, the day before, both numbers were over 80. Both were over 80. Over 80, you lost your bullish embedded reading. But the objective when that occurs is just the 18-day average. Doesn't mean it can't go lower, but that's it. The bigger question is, if we're coming to the end and when the rate cuts start coming, does that hurt the dollar and keep up other currencies? That will be the million-dollar question. I think it will be. In the euro, you're back down into the support of the 200-day average in gray and the Bollinger Band, a spot where I think the trade is going to be covering some shorts. However, the trend is clearly to the downside, and until it's over, it ain't over. Do I think today's high is super important on a scale of 1 to 10, a 10? It's an outside day down. It's a continuation of a downtrend. If taken out in the next 48 hours, it poses a problem for those that want to be short. Tomorrow at 7 in the morning, we should hear from the Bank of England. It's widely expected they'll do nothing. You have been going sideways for the longest period of time. This thing's wound up. It could easily break out of here either which way. We'll have to listen to what's said. When we look today at Bitcoin, it didn't do very well. It sank back. It's down $90 today, but the first challenge of the 18-day average resulted in one close over it and then a $1,000 drop right back. But as I've said, and I'll stick with what I've said, I think you formed the bottom right here. I don't think the market has to go substantially lower basis current chart action. Then we look at energy prices. And on the energy markets, the EIA today said the U.S. set a brand new record in WTI production for, I think it was the November period. I don't know if it was November or December. I forgot. I wrote it, but I forgot what I wrote. But a brand new record, and that's impressive to the market. It's all happened, by the way, and that's because of Texas, in a large part that is going on there with the production. But it's technology. And our technology's gotten better because it's in spite of the Biden administration, who at every chance they can, they take away leases, they take away pipeline access, they take away everything in the quest to buy votes for climate. And I'm going to repeat what I said. I want a green climate. We have to get away from fossil fuel. I want to be at the head of that line. But you do it as a blend. You do it with solar. You do it with wind power. You do it with water power. There's many things that you do simultaneous. The world is not going to get off of fossil fuel right now. If you think you shut down us and they're not going to buy it from the Saudis and other OPEC members, what planet are you living on? So work with it, take advantage of it, and do it in the cleanest way you can. Do you think we're greener in our oil than Africa or other parts of the Mideast? I would say we probably are because of the pressure on us. But don't kid yourself. This isn't going away anytime soon. At the same time, if you fall a bit more, support here. Now, the cuts on interest rates, you got to put it all together. Is that bullish or bearish down the road? It's probably good news down the road. When we take a look, where did this market run into its trouble on our WTI? Look at the first challenge here of the green line, the 100-day average and the Bollinger Band. And you think that didn't drive it back down to the next, what was resistance, now support, the 200-day average and potentially the 18. You also lost that upside momentum. Market's rebuilding, but nothing here is bearish. You still have higher highs, higher lows. You just got ahead of yourself. Same thing in the heating oil, but it's overbought as can be. And in the nat gas, well, if we're producing all that record amount, you're producing more natural gas. So in spite of the Biden administration coming out with all their vote-getting methods, the reality is there are people out there that realize we have allies, they need our nat gas. Where are they going to get it? They can't get it from Russia. You're watching Ukraine, they're begging for bullets. They need money for the arms that they're getting. We're not there yet. Where's our budget? I'm going to repeat, where is our budget? Did you read anything of anybody talking about a U.S. budget? I don't. They're trying to break away the border. I still don't understand what the Biden administration thing is with our border. And I've asked you all, write me. I mean, don't write me as a jerk. Write nice and say, this is what they're doing. What are they doing? We used to be that you'd come in to the country, you'd fill out forms, you'd go through the necessary work. If there was a quota against it, you couldn't come in. If you could, away you go. To leave these many millions of people just coming in, and you say, well, we're overwhelmed, so we'll give you asylum, just go on through. Give them work permits, give them these other things. You know what I'm saying. But today was a different day, folks, and that's what I want you to understand. Today was an important day. The jobs report Friday is important. You see all the reports we're getting tomorrow. I'm worn out from it. You have yourself a great evening. Sorry I'm talking these politics. It's not that I'm Republican or Democrat on them. I know it sounds like I'm anti-Biden to a lot of you. I'm anti his policies. Can I make that any clearer? I don't understand the logic of a lot of them. I'm Ira. You have a good day.